please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Halftime Report. Well, it's 12 noon. We're halfway through the trading session. It's a good time to run you through what's going on at this point of time. I'm Nigel D'Souza and with me is Sumaira Abadi. Well, Sumaira, you're wearing some red, actually, a tinge of red. It's green at least now, but we can't rule out red at some point of time.
Yeah, so perhaps I'm a little ahead of the curve. Not that I'd like to be. I'd like some Friday cheer as well. But yeah, let's see how things go. For now, it looks like at least the Midcap index would move into the red anytime now. Banking stocks already under pressure. So let's see how things go.
That's right. You know, Sumaira, the breadth of the market has been under some pressure. And you take a look at the Asian markets. I remember, you know, early this morning, before we opened up, we were talking about a 400, 500 point rally on the Nikkei. The Kospi was trading with a gain of more than 1%. All that's really come off from the high point of the day. So the Nikkei now is up only around 100 points. The Shanghai market is holding mildly in the green. The Hang Seng as well is up closer to 300 points. But all those markets have come off the high point of the day. Pull up the Kospi. I remember in early morning trade, it was up nearly around 40 points or thereabouts. Now, in fact, it's up only around 20 points as well. So we'll keep an eye out. In fact, the market is trading with some gains, but you need to look at the broader markets actually, because the advanced decline ratio is more or less 1:1 as we speak. The Nifty Bank, that's the naughty one today. That's seeing some selling pressure. And in fact, take a look at BEML. You know, we were talking about this yesterday. The stock was down 4%. And from the highs that we saw earlier this week of around 1,350 or thereabouts, the stock is down close to around 30%. Okay, so it's down 4% today. Now we'll pull up a last 1 week chart odd, and you'll see that intra-week, you know, it went to a high, and then from there is just seeing some selling pressure. Also pull up some of these Adani Group stocks. Adani Enterprises is taking a bit of a knock. NBCC as well is moving lower as we speak. Yes, we are up 45 points, but otherwise, you know, there are a few stocks that are getting a bit of a whack from the broader markets. What say, Sumaira?
Yeah, but you know, interestingly, TV18 broadcast is seeing a 3% up move. So with the standard disclaimer, of course, that it's the owner and producer of the channel that you're watching. But that stock doing well. Of course, L&T Finance Holdings, there's news on that one. A lot of these NBFCs, actually, you pick up any one, M&M Financial, there's Bajaj, Fin, Shriram Transport, all of them doing well. Of course, IFCI, there was news this morning of some government infusion. And on the downside, you know, Relcom remains in focus now with about a 4% downtick. But Nigel, you've been tracking Tata Steel. What's the impact now post this tariff restrictions? You
know, Sumaira, it's not looking good because there is uncertainty first, and in fact the tariffs as well have been imposed. So not good because you don't want any uncertainty in a commodity cycle. But I was looking at the rights issue. You know, the rights issue was on February 1st, and if you had to buy it on T-2, in fact, you would be eligible for the rights issue. That would mean that if you had 25 shares, you would get 4 fully paid shares at a price of around 510, and you'll get 2 partly paid shares at a price of around 615 rupees. Now, assuming that you bought this particular, you know, you bought those 25 shares just to be part of the rights issue, you're about 25 shares on T-2. That would be at around 775 rupees approximately. So your break-even price really comes in at around 731. You'll ask me why? Because the 25 shares, you paid around 19,396 rupees. The 4 paid-up shares, you would have paid around 2,040, and for the part paid up shares, you'll get paid around 1,230. You put that together, you'll be, you know, your 31 shares came at a cost of around 22,666, and you just divide that, 731 would be your break-even price. And sad to say that as we speak, in fact, it's a tad bit below that particular level.
All right, but speaking on the metal space, let's also head across to Manisha, who's tracking the entire commodity space. Hi, Manisha. Not turning out to be a good day there?
Oh, well, it's actually very sharply down when you look at most of those metals. So it's 5% a piece down for the iron ore and the steel prices in Shanghai. And it is in the same markets that you have seen the copper prices decline to the lowest since the month of September. You have zinc and aluminum trading at 3-month lows as well. So everywhere that you look in the metal space, there is this uncertainty coming in from the Trump's decision, and how the other countries would really react to it, retaliate to it, is something that really is weighing on to all of these markets. The expectation also, or rather the numbers also show that the imports into China for the month of Feb haven't been so great, and that's yet another added pressure. The near-term increase in warehouses of many of these LME and Shanghai markets also is something that has been pulling the prices on the lower side, and add to that the fact that the US dollar also is on the stronger side today. So there's nothing really working that would tell you to go out and buy in this metal space.
Okay, all right. Thanks so much for that, Manisha. Well, let's hop across to Anisha. She is tracking the new kid on the block, HG Infra. Anisha, over to you.
Well, yes, Nigel. Actually, the listing was pretty much flat at around 271 rupee level. It went into the red, recovered a tad bit, and the last time I checked, it was just a tad bit higher than the listing price. Now, if you look at the valuation, it is rather fair, sitting right in the middle of what the sector is trading at around 260 rupee level. The forward P for FY18 would be around 21.6. For around 270, it will be around 22.5. Now, Angel Broking says on the valuations that the post-issue valuation will be around 33 times FY17 EPS, and this is largely in line. In fact, it is 10 to 15% discount to what the peers like Dilip, Buildcon, KNR and PNC have been trading. Remember, all these stocks are trading anywhere between 25 to 35 PE multiple, depending on what EPS you want to give in the forecast. ICICI Direct says that it is around 25 times the FY18 rough EPS. In terms of the financials, they have been doing well, but do remember the scale of the business was small, and that's why they were showing the rapid growth of around 30%. That is what they've done in the last few years. The management sounded fairly confident. They said that they're looking at 30% growth on the top line FY18 itself and 60% growth on the bottom line. Let's see whether that is possible or not, because H1 was rather subdued, looked pretty much flat year on year. Let's see how quarter 3 and quarter 4 pans out. In fact, let's listen into what the management had to say.
The debt as of 30th September was 350 crore. That is short and long, both. Out of this, 115 crore would be retired. And for the next year, we are not looking at further debt. So with that, the debt equity ratio would be in the range of 0.4, 0.5%. With the debt reduced, you can see fairly improvement in the PAT margin as and with any of those projects which we are looking at high profit margins, and with the concentrated cluster-based working that we believe that Rajasthan and her Maharashtra as of now, that would be good scope for increase in the profit margins. We can see say EBITDA which we had during the first 6 months, 14.6, that we can have a much increase over it.
All right, let's hop across to Abhishek. He's joining in with his quick take on L&T Finance.
Well, Nigel, they have launched a QIP of 1,785 crores. So this is the second round of fundraising being done by L&T Finance after it raised 2,000 crore from its promoter company, that is L&T. That happened yesterday. So in 2 rounds of fundraising, they have raised about 3,785 crores. So what this means for the company? Now the floor price is at 161.8. That is against 185.6 rupees that they placed it with L&T, the promoter company. So promoter's stake, after taking into consideration their fund infusion, will decrease by 3.6% to about 62.5%. Now with an equity dilution of 5.9%, the book value after this QIP will increase by 8% to close to 71 rupees per share. But let me tell you that the 2 rounds of fundraising totaling to about 3,785 has led to increase in book value by almost 20%. Back to you.
Okay, Abhishek, thanks very much for that. Anisha, a couple of companies in the news on the back of order wins.
Oh yes, and I'll start with Rolta, which has bagged an order of around 365 crores, and that's for digital transformation. We have been hearing about a lot of large deals coming in the digital space. Even the smaller companies making a move in that space. For BHEL, they've bagged a big order, 11,700 crores for a 2,400 megawatt plant, and this is at Patratu for Jharkhand. Now the reason why the stock is not moving high despite a big order is the fact that part of it is already factored in, because the management has been talking about this order for over a year now, and that's the reason we are not seeing that uptick. Dilip Buildcon, well, they have been declared lowest bidder on another order. This is an EPC order for around 770 crores. The company has already surpassed its order inflow guidance. We have been seeing a lot of order inflows for all the infrastructure companies. Again, the reaction is limited because a lot is already priced in as far as this stock is concerned, a bit rich as far as the valuation is concerned. Back to you.
Okay, all right, Anisha, thanks so much for updating on all those order wins. Well, here's a quick recap of all the buzzing stocks we have from the ferrous space. Tata Steel, we have HE Infra, L&T Finance Holdings, Rolta, BHEL, as well as Dilip Buildcon. And Prakash Industries is the stock in focus. The stock has been under pressure. Remember, there have been allegations that an RTI activist has been talking about Benami transactions. To discuss this and clear the air on this, we have Mr. Ved Prakash Agarwal, the chairman of Prakash Industries, who joins us. Hi, Mr. Agarwal. Thanks so much, sir, for joining in. First things first, the stock has taken a beating because these reports indicate that, in fact, this RTI activist is talking about Benami transactions. He's talking about various other possibilities. He's been reaching out to various, regulators as well. Tell us, sir, What is your clarification on this? Have you all approached any courtrooms? Have you all approached this RTI activists? Have you all received any notices?
Yeah, these are the facts are different than what they have projected, and there is nothing at all which is adverse in the case of the company. Everything is fine with the company, and I assure all that everything is on board. Yes, sir.
So, Mr. Agarwal, if you say that the allegations are bogus, are you planning to take any action against it?
Yeah, we would be proceeding against them in due course.
Due course, sir. So, just for your shareholders, sir, they have been very, very worried. You know, which year did these transactions take place that he's talking about 400 to 500 crores? If you could help us out with that. And if you could tell us, sir, you know...
Yeah, these...
yeah, go ahead.
Yeah. Yeah, these transactions which they talk about is relating to year 2014 or 15.
Okay.
And these relates to the sale proceeds of the company.
Okay, so your shareholders don't have to worry as of today that any of these transactions take place, or even you could be penalized or anything, or maybe, you know, there could be some penalty that's levied on you. They don't have to worry on that front, according to you?
Yeah, not at all, because these transactions have already been assessed by the various sales tax department, and at all the levels the company has been assessed up to date. So there is nothing pending against the company. Yeah.
Okay, let's move on, Mr. Agarwal. Your turnover is what, 3,000 odd crores, right? Do you have any exports at all?
Yeah, the turnover is likely to be around that in this year, because last year was 2,200. This year it's likely to be around that figure you are talking about. And all our sales are domestic sales. There is zero export from this company.
All right. So you won't be too worried then about what President Trump is doing in the United States, I would imagine, Mr. Agarwal. But I remember we spoke to you at the end of Q3 and you were sounding very, very optimistic about the domestic steel market. Tell us, on the ground, is demand strong enough? Is there any correction in prices? You know, your take on that, sir. Is demand strong enough? And also, I want to ask you about that 25% margins that you were talking about last time. Is that possible?
Yeah, the steel market has further improved during these last 2 months.
Okay.
The selling price, which were prevailing at that time, now is much higher by another 4 to 5%. And the domestic demand is very robust at this moment, and there is a shortage in the country. Besides that, the worldwide shortage is also appearing, so the international prices also of all the steel products have gone up. So therefore, what we feel is that the margin should further improve in the next quarter, and also because the iron ore prices have little bit softened. NMDC had decreased price this month. So with that, our margin should also improve as the time goes.
Okay. Sir, you know, you had post Q3 told us that you'd hit 100% utilization. So what's the capex plan? This PVC unit that you have set up in Uttarakhand, is that part of it? What's the total outlay that you have in mind?
Yeah, the PVC pipe unit, which is our long-standing unit, and which also is a matter which we have to go for demerger in due course of time. Therein we have taken a 100% expansion program in the next 2 years' time. And further to that, we have taken in plastics a further diversification to exploit the high growth and high margin segment, that is flexible plastic packaging business. And the company would be manufacturing high performance barrier films and laminates that find application in packaging of food, beverages, oil, personal care and pharmaceutical products. So this new venture also in plastics would be forming part of the PVC pipe undertaking, the new company which will emerge out of the demerger progress the company is doing.
You know, Mr. Agarwal, that entity that you demerged, your shareholders, now that the stock has taken such a beating, they must be saying, when will we get those shares? What is the update there? When do they get those demerged shares?
The program of demerger is going properly.
Okay.
We have already received the NSE approvals, and now the further the required procedures and approvals are under process, and it may take another 6 months.
Another 6 months. Okay. Very importantly, Mr. Agarwal, you know, the stock started doing well when you started reducing your debt. The business cycle turned as well. Give us those numbers. How much debt have you paid in the first 9 months? And do you intend to go on with this repayment plan? Because you're talking about some expansion as well.
Yeah, the profit visibility is good with the company, and with that we were able to repay 160 crores during the first 9 months.
Yes.
And during this quarter also, we have already prepaid the external borrowing, which was about 116 crores that we have already paid by 28th of February.
Yeah.
So, and other repayments are happening. So there should be a substantial reduction. Further also, the fully convertible bonds, which also are getting gradually converted into equity. So that also loan is getting down. So we feel that at the end of last year, the total loan was about 950 crores, so which should come down to somewhere around 700 to 750 crores by end of this year.
And by end of next year?
And by next year, gradually it may reduce, and we have given a guidance that in next 2 to 3 years, the debt may be zero.
Okay, all right. Thanks so much, Mr. Agarwal, for stopping by and giving us those details and clarifying on your take of what the RTI activist has to say. And in fact, as you state, domestic steel market is looking good. The worries really are coming in from the United States as well. The stock has seen a sharp correction. I think it's nearly around 100 rupees from the recent high that we saw in January 2018 itself. But keep an eye out on the ferrous stocks. Just take a look at SAIL. That stock has even broken the 70 rupees odd mark. So keep an eye out on that one. The intraday chart should come up for you. Tata Steel continues to see some selling pressure.